Hello, everyone. I hope that you are doing well. Welcome to the second real webinar by Rich the Bull. Rich and I were just speaking about this webinar, and there was so much demand for this that we needed to make it happen. And Rich just literally said to me that if you do not understand the complex things within our understanding of price action, then this webinar will literally solve it all. So you better buckle up, get your notepads out, because this is going to be a very exclusive webinar. Let's dive in. Are you excited, Rich?
Yeah, mate, let's do this.
Yeah, this will be fun, man.
Sound. So, what I was thinking was, mate, to start with the unicorn model. Now, as you already know, on social media, YouTube, Twitter, there's that many different people showcasing the unicorn and bragging they know what the unicorn is and how it works and all the rest of it. And in actual fact, they haven't got a clue, right? They literally just pattern trade a breaker and a fair value gap, and that's what everybody does. Like, you see everywhere. I can't act smart because that's something that I did originally, until obviously you pointed out the real unicorn. Some people are going to be questioning the real unicorn, but yeah, the real unicorn, what ICT was actually pointing out. Now, the thing with the unicorn is the same as what we're going to go on to after with the three candle model. Both these principles, most people pattern trade them, right? And it's the worst mistake they can do. There's a logic behind everything that we're going to show today, right? And I'm going to try and cover the logic as best as I can without going into too much detail and going over people's heads. So the unicorn, as you've already pointed out, Zeus, in previous videos on YouTube, was from the 2022 model. And I have an image here, and the reason I've got this image is because this particular image is probably one of the most cleanest patterns, we're going to say pattern for now until you understand the logic for the new people, that you will ever come across. For any of you that want to view this in real time, this was from the 2022 model, and this was episode 3. Okay, so episode 3 of the 2022 model. ICT shows a long and a short version of the market maker model using the unicorn models for entries, right? Now, the basics of the unicorn model, or should I reiterate the real unicorn model, is the fact that we have a breaker, right? The breaker is obviously a low, a high, a lower low, and then a higher high, right? And basically, sell side gets taken and buy side gets taken. This is how we recognize a breaker. Okay. So as a pattern, we're going to call it a pattern for now. Okay. What most educators showcase is the fact that we've got a breaker and we've got a fair value gap, and we're waiting for that retest of the fair value gap and the breaker, and this is where we enter, right? Which is okay, and I still do that to this day, only when there's no SIBI on this side or no fair value gap. Okay. Now what's really going on is here, it's not a pattern, it's a logic, it's a complete logic, and I'm going to explain the logic, right? The real unicorn is a breaker inside a SIBI, right? The SIBI can fold inside the BISI. So for anyone that already follows trading and understands what's going on, it's basically the breaker falls inside a BPR, right? But it's a very specific BPR because we have to be able to pull the fair value gap from the SIBI through the BISI cleanly where possible. The cleaner this model is, the more effective and high probability this model is, right? This is an entry model. This particular one's an entry model, right? The reason I'm reiterating entry model is because later you'll see how we can use this for bias on a higher time frame. This is what a lot of people miss, okay? So the logic behind this is very simple, okay? We watch price print. Price prints a SIBI. We know that by the time this candle finishes printing, okay? Price comes back up and retests the SIBI. Don't forget, we are clearly bearish at this point on this side of the curve, okay? We're bearish. Price comes up, retests the SIBI, completely respects the SIBI, right? We get a clear rejection wick and we respect the SIBI. No one can argue that. Now, two things have already happened here. Firstly, because I've probably already got, or should have, a POI and a key level marked out down here, I'm waiting for a reaction. I'm already anticipating, right? This is a big thing that some of you guys don't do and you need to start doing. I'm anticipating the breaker. So I'm already anticipating now that this could be a breaker. Okay? Price comes down, makes the SIBI, okay? Retests the SIBI, right? Now, when this SIBI holds, we are proving that we are bearish. Okay? Listen carefully. When this candle rejects with this rejection wick and starts to fall away, price starts to fall away, we've proven that this level is holding because we're in a sell program. So therefore, the SIBI is going to hold price. Okay? Price comes lower, hits the POI, hits the key level. We then get a rejection wick on the bottom. Okay? And then when we also get a nice clean CSD with this large engulfing candle here. Okay? This big powerful candle that displaces over the order block. Right? Very basic for some of you, but this is where it starts getting technical. So the logic behind this trade, right, this entry model, is this. As price comes back up, we should respect this level. This level should not get broken. Why should this level not get broken? Because, as Zeus pointed out in his previous videos, right, this now is an intermediate term high. It's an intermediate term high because it formed inside this SIBI and it respected. So this level, if we are bearish, should never get broken again. Okay? So it shouldn't get broken because it's proved that we're bearish. Once this candle, this displacement candle, right, violates, this is the key, violates aggressively, right, this SIBI, now we're in a buy program. This is a proven buy program. Yes, we can use CSD right here, what most people call CSD. For me, this is okay, and yes, I can trade this, and so can many people, right? But this is not high probability right here. The same as the Turtle Super is not high probability, which we'll get into shortly. This is the true CSD right here, this move. Once this move happens, there's two things that have to happen, okay? We have to close above the breaker, and we have to close above the SIBI. Once this happens, this is confirmation, right? This is a high probability setup. This is the only kind of setup that you should be looking for, okay? And for those of you that are not profitable, okay, or are on the way from break even to just getting profitable, and for those that are just not even profitable, this is the only entry model you should be looking for. This is it. This is the only one. That's what I advise personally. Okay? This is what I'm currently trading right now. Turtle Soup's out the window, gone, right? Nobody should be teaching Turtle Soup to beginner or even intermediate traders, in my opinion. Okay. This model now.
Rich,
Sorry.
continue. I wonder, Rich, before you continue,
Yeah.
do you mind sharing like why waiting for that break formation, why waiting for that mark structure shift is so powerful?
Yeah. Of
Because
course.
does it occur, for example, randomly in price action? Does it occur anywhere in price action, or does it occur only after specific things have occurred?
Good question, mate. So, again, this is why people shouldn't pattern trade this model, because for sure you may see this, if we call it a pattern for now before you understand the logic. They will see this on on a leg on the sell side of the curve, or on a leg on the buy side of the curve. So what I mean is, in the redistribution, in the distribution, in the accumulation, in the reaccumulation, you can find this happening, right? But this model is very specific, right, to the wicks. And some of you are going to say, well, okay, what do you mean by the wicks? This happens in the wick of an hourly candle that purges or sweeps liquidity every time. Now, what I do want to say is, the unicorn model, I want you to think, I've said this in the previous webinar, okay? The unicorn model, or the true unicorn model, which we're going to call it now, okay? It's like a snowflake, okay? I know what a snowflake looks like. Zeus knows what a snowflake looks like. Everybody knows what a snowflake looks like at first glance. But every single snowflake is slightly different. That's why I'm showing you this particular model right here, because this model is the cleanest one. This is why ICT showed this in the 2022 model. Now, to answer Zeus's question, this model will show itself in every hourly wick, right? And what I mean by every hourly wick is, if we bearish, right, it's going to present itself in the open high wick. If we are bullish, it's going to show itself in the open low wick of the hourly candles. Okay, we'll see examples shortly. The other answer to the question is, mate, what the average person doesn't know, and what all these other educators can't tell you, is that once we have this level here, this BPR, the reason price will not come back down to this, and the reason why, as you can clearly see here on these entry candles, we have clear rejection wicks before price moves off, right? And that is because right here, if I was to draw a line here, okay, there's an algorithmic price level right here that forms. You've already heard me say hundreds of times, this is an algorithmic signature, right, in price. And the reason is, this is what all the other educators can't tell you, because they don't know, they don't understand it. There's an algorithmic level, algorithmic price level right here. Okay? And this is a signature that happens every time price comes through that level to sweep or purge, not to close below. There's a big difference. To sweep or purge that level, it comes down here to reprice in some kind of discounted price. Okay, so it comes down to reprice in a discount before going higher. And the algorithm is basically saying, okay, we're in a sell program, okay, as soon as this starts occurring, it's the algorithm saying, okay, We're going to sweep liquidity. We're in a sell program. We're going to change into a buy program shortly. Okay. Then it says, okay, it's aggressively. Look how it's aggressive. It has to be aggressive. Violates this price level. Okay. This SIBI. This breaker. Retests to reprice again on the fractal move, because this is the fractal move of this bigger move, before going higher. And once this happens, this is the trigger.
You just mentioned that we move from a sell program to a buy program, and that we can confirm this. How can we confirm this?
There's multiple ways. The two main ways, okay, one is SMT, for sure. SMT, it's a good question actually, because it's something that I don't normally tell people is this, okay? On a higher time frame, we would have an SMT on a 1 hour or a 4 hour, for example, with this low, right? But you need to listen carefully. I use what I call confirmation SMTs. So on a higher time frame, we would have SMT here, for example, with Nasdaq, which is the most high probability. But then I'll be looking for a confirmation SMT on the lower time frame. I'm only going to say this once, okay? The leg that made the breaker, if we get SMT from this swing low to this swing low, so the leg that made the breaker, SMT with the SMR, this is very, very high probability, like 90%.
And what about the timing aspect?
The timing aspect.
Do you look at this during the midnight, or during specific times of the day?
Okay, so time is something that everybody gets super confused with, and I think Zeus, like, you know yourself, because I'm sure you get the same questions. People get, like, how do you say, like, all they think about is time. They try and find some secret method to find time. They try and, you know, use mathematics. They try and do all kinds of things. Using, no disrespect today, but quarterly theory, different cycles, all different kinds of cycles, and all these things. Now, time can actually be a lot simpler than you think, and it basically boils down to this, right? Forget trying to find the time down to the minute. Forget it, right? I've already posted videos where ICT blatantly says you cannot time anything down to a day, a week, or even an hour. Okay? But I would slightly argue the fact, because I do think we can get time down to the hour relatively accurately. So the way time works is you'll be waiting for the liquidity sweep or purge, okay, to happen in a kill zone. So that's the bigger fractal, okay, is the kill zone. So we'll be looking for the New York kill zone, for example, which is one of our favorites. Then in the New York kill zone, how would I know when to look for this to happen? Very simple. Everybody overcomplicates it. The economic calendar. Is there news today, yes or no? That's the first question you should ask. If the answer's no, it's very simple. You're looking for the high or low to form around 9:30. Okay? Now, just because I'm saying 9:30, people take things very literal. It doesn't mean that this one candle here is going to happen at exactly 9 o'clock and this candle will be 8:59. That's not how it works. Okay? You need to understand that when people give times, dates, these models like so clean, it doesn't always mean that it's going to happen on that minute, on that day, or that model's going to be this clean, right? Don't take things so literal. You have to learn to adapt. You have to learn to be slightly vague when it comes to trading, right? Nothing's ever perfect. So what can happen is two things. This could be 9:30, this could be 9:45, this could be 9:20, this could be 9:15. Okay? But we say that this is 9:30 no matter what time it is. This is the 9:30 SMR, even if it happens at 9:10, even if it happens at 9:50. Okay? It's still the 9:30 SMR. This is what people need to understand. That's on a non-news day. Okay? Is the news today yes or no? Yes, there's news today. Okay, what time's news? Okay, time's 8. The news today is at 8:30. Okay. Now we're looking for an 8:30 manipulation. Right? So we can anticipate an 8:30 SMR or manipulation. Does that mean it'll happen at exactly 8:30? No, it doesn't. I'm going to show you ways to anticipate the exact time within an hour. Very shortly. So it's very simple. Trading is very simple. It's too many people overcomplicated. They make it very difficult, right? It's very simple. Kill zone first, okay? New York kill zone, right? AM. In that kill zone, how can we narrow down that 4-hour kill zone into something a bit more realistic? Okay, because kill zones also can be different through different educators. Okay, some people say 8 till 12. Okay, some people say 7 till 11. Some people say 9 till 11. Right? There's no right or wrong answer. Nobody's right, nobody's wrong. Right? Nobody can tell you what's different. Right? ICT set his time zones for a reason. Obviously there's a reason for those. I use slightly different because mine is 6 hours, which I can show you an example of after. But I do basically narrow them down to, if there's no news, 9 till 11. That's my New York kill zone. Okay? If there is news and it's an 8 o'clock news, 8:30 news, then my kill zone changes slightly and it extends and it goes 8 till 12. Right? So if there's news in between, if there's any news on that day, should I say, let's make it simple. If there's any news on that day, my New York kill zone is now 8 till 12. If there's no news, it makes it a lot simpler for me because it's 9 till 11. That's just my preference. I'm not saying that's right. I'm not saying that's what you should do. That's what I do, just to make it simple.
I hope people are paying attention because, of course, we're just stuck on this one image for now, and it's a lot of talking, of course. So people really need to take time to appreciate what you're saying because you're dropping so many gems already.
Well, that was the plan, mate.
Yeah, of course.
Without
opening some eyes.
Without you probing me like the last webinar. You were definitely getting your money's worth out of me on that one, mate. Right. So back to the model. We'll come back to time, don't worry, but that's the basics of it, right? Coming back to the entry model, I hope you all understand this logic, right? There's a real logic behind this. It's not a pattern. There's an algorithmic price level right here, right? And as Zeus says, this, guys, you have to understand, this happens every single day, every day, not maybe 3 times a week, every day, every single day, right? For those of you that say, I couldn't find an entry or whatever, I understand that you're new, and yes, that's part of the process. But guys, listen, this, I don't care what anyone says, this happens every day. Every single day, every single liquidity purge, this happens. This model presents itself, maybe not as clean, maybe not identical, but it's there. And it has to be there because when this occurs, okay, there's an algorithmic price level. And when there's an algorithmic price level, there has to be a unicorn model. It has to be there. It's the signature of exactly what's happening, and this gives you the heads up, right? Now, for those of you that have known me a little longer, you will also know that even if your bias is wrong, right? So even if you get your bias wrong, okay, because you're new, if you are new, you should be setting goals small, right? You shouldn't be aiming for 20, 30, 40 handles, right? Or pips if you're trading Forex. This works on anything, by the way. Works on Forex, crypto, anything. Anything you can trade, anything with a chart, this will work, right? Across the board. Even if your bias is wrong, this will guarantee you 5 handles, right? There's a very specific reason, right? It's actually 4.5 handles. I shouldn't have said that, but it's okay. Let's say 5 handles. Hope you're listening. This will basically pull you 5 handles. Even if your bias is wrong, it'll always take out the nearest intermediate term low or short term low to the left, which should almost guarantee you 4.5 to 5 handles here, right here, in a matter of minutes. And if you noticed, most of my videos, this is all I do. I don't care about people say, Rich, why did you get out there? Why did you not take it? It went 50 handles. Guys, I honestly don't care. I never once come back to the chart and say, oh, I'm gutted it went 100 handles. I don't care, because listen, that 100 handles is not guaranteed, right? That was mainly luck. Yes, you can have your draw on liquidity, but it doesn't. We always know the draw on liquidity is going to get hit, right? Some of us, we are at that level where we know which draws are going to get hit. But the point that I'm trying to say is, it doesn't mean that it's going to hit in that session. It doesn't mean that it's going to hit on that day. Nobody knows that. ICT's already said you can't explain or foresee a time when the drawn liquidity will get hit. If you can't see a time or predict a time when the liquidity is going to get hit, guess what? You can't tell the time that an SMR is going to occur. Because if you can't tell the time that a drawn liquidity is going to get hit, what happens after that? Okay, you either get a continuation or an SMR. It's not possible.
It's always one of those two. That's
Yeah.
what people need to understand. And I think that's one of the beauties about what you just explained, is that you're not trading to impress others. You're not trading to get those high RR trades or whatever, those really large runs. You're just trading the moves that you know occur every single day, every single week. And that's what matters. It might not be fancy, it might not look cool, but it works and it repeats. That's the thing. Who cares if the market moves 100 handles and you only took a small portion of that? At the end of the day, it's about making money, not impressing others.
Yeah, mate. And this is why I'm coming to the point that in my videos recently, everyone will know that I just don't take the turtle soup. I'm not trying to enter on these wicks anymore. Zeus can tell you, I had a personal conversation with Zeus, and I was like, Zeus, my win rate's gone down. I'm not happy, right? And Zeus is like, why are you even trading like that? Like, you know the best entry, right? You know the best entry model. Why are you trying to soup? Why are you letting your win rate go down? Because guys, listen, although this is CSD, and there's educators out there teaching CSD, and there's educators out there telling you once there's a close above the order block to enter, right? Other people aren't even waiting for that. They're literally trying to enter on the wick, which is something that, look, Zeus can clarify, I am capable of it, right? And I am capable of doing it to a profitable standard, right? But listen, guys, if I'm honest with myself, guess what? Right, here's some truth for you. I was showing off, right? That's it. I wasn't doing it to make sure that I'm making money. I was too busy thinking about how good my Twitter video will look, right? Or to prove that I'm one of the best traders, because I want to be one of the. I'm not saying I am one of the best traders. I aspire to be one of the best traders, right? That's one of my goals. But guys, listen, turtle soup entries. Yes, I love turtle soup entries. Turtle soups are powerful. They are. But don't trade them. let the idiots trade the turtle soups, right? And if you do trade turtle soups, I'm not saying you're an idiot, but look, what I am saying is, as a beginner or even as a professional, right, it's a fact, a mathematical fact, right? There's no arguing. If you trade turtle soups and you're entering, right, before this level gets broken here, right, this exact level, this is not guaranteed, this move. Trust me. I've back-tested this hundreds and hundreds and hundreds and hundreds of times. I've traded it live hundreds and hundreds and hundreds of times. Zeus can be my witness. What did I say, Zeus? I said, Zeus, my win rate's going down, stressing me a little bit. And what was your reaction?
I literally told Rich to go back to what he knows to be high probable, because you need to understand that it's possible to enter in the SMR. It's possible, you can do it, because we anticipate an SMR to form. Yes, we know when it's likely to form. However, what you need to understand is that it's way more probable that when you wait for an SMR to form and then enter, than when trying to capture the exact bottom. And it might look cool on the video, it might look, whoa, look at that high RR that you managed to pull off there, or I don't really subscribe to R, but you get the idea, that you enter there on the bottom and say, whoa, look at that massive move that he took. Now, compare that if you would simply wait for all the confirmations to be aligned, because you need to understand, a low will not form there, followed by the signs that confirm a low formation, and the breaker setup, if all of those things are not aligned with one another. It's the sequence of events. It's step 1, it's step 2, it's step 3, it's step 4, it's step 5. All those things occur to confirm that a low is forming. While some people try to enter based on step 3, for example. Why not wait for those extra steps to be confirmed and then do something? It's a major difference there. It's just those extra confirmations, and look, you're still entering in a very deep discount. That's what you need to understand. As long as you're in a deep discount, you can enter wherever you want to enter. And that was one of the revelations that you had as well, Rich, right? That you just press on buy, for example.
Yeah, mate. Listen, you're in discount. You find an SMT, right? With it, even if you wanted to do it this way, you wait till you're in deep discount, right? You've took some kind of liquidity. You've purged it. You look for an SMT. You look for a confirmation SMT, and you can just enter with nothing. If you wanted to.
As long as your POI selection is on point, as long as you are able to see reversals occurring, that's what you can do.
Now, guys,
we move on to a real chart, Rich.
Yeah. What I do want to finish off is this, right? Listen to this, right? What does ICT say about a failed trade idea? Have a think about that for a second. He says you wait for 3 PD arrays to fail, okay, and you jump out of your idea, or you jump out of the trade. Do the opposite here. Think about what I just said.
Light bulb.
For those of you that don't quite get it, I'll explain it very quickly. In this instant, you're waiting for 3 PD arrays to fail. So it's like saying to yourself, okay, 70% of the time I'll lose a trade, right? So what do? You say, okay, what would I normally do here? I would go short. Okay, so what I will do is actually I'll go long, right? In this circumstance, what you do is, instead of you're looking at a trade, you're in the trade and you're waiting for 3 PD arrays to fail to jump out of the trade, you're waiting for 3 PD arrays to fail to jump into the trade in the opposite direction. It's that simple. Now, we're going to go into the charts, but this theory here, now, I don't want to call it theory because it's a fact. It's not a theory, right? It's a fact. And I'm going to keep saying it until this drills into your head, because then you'll know how to be on the next level like the rest of us in TOTK. This level is an algorithmic price level that's predetermined before the session, and the algo already knows that we're going to react here, and I'm going to prove it to you in real time right now. Okay?
whilst you're switching to the TradingView chart, do you mind explaining your opinion on theory versus facts?
Well,
Because there are so many theories that get thrown out there nowadays. What's
well,
the difference between the theory and the fact?
that's what they are, mate. They're just a theory. No, anybody that's anybody that knows. All guys, listen. Go into any dictionary and search theory. Right? A theory is theoretical. It's an idea, right? It's a logical idea. So it doesn't mean that it's just an idea that's pulled out of the sky. It's a logical idea, but it's still an idea. It's not a fact. So if anybody has something with a theory in it, time theory, okay? I'm not going to go into the names, but time theory, range theory, anything theory is literally that. It's a theory. It's an idea. It's not scientifically proven fact. That's why a scientifically proven fact is called a scientifically proven fact. If you notice anything to do with deep space, they normally call it a theory because nobody knows, because nobody's ever been there to test it and prove it. That's why it's a theory. Okay, and we'll leave that there. So the unicorn model, I've showed you the entry model, and it will happen in the wicks, right? So for example, it would happen in this wick. But before we get on to that, I want to prove to you that it works, right? But what I'm going to do is I'm going to throw a real spanner into the works while I do that, because as you guys know, majority of the educators on Twitter and YouTube, I hate them. They're liars, right? They're marketers. They don't make money trading, right? You need to listen to me. You're in the right place. You've got the right people behind you. Here we prove things. We don't just tell you things. We don't just say, look at this pattern and follow it. We prove our actual knowledge, right? I nearly said theory then, but I don't want to be saying theory. So, guys, look, for any of you guys that know me and TOTK well, there's a few things that I'm going to go over what you might have already heard me say, but I don't trade order blocks. I don't really trade many PD arrays at all. I only really trade highs and lows and liquidity. That's all I focus on. My whole game is focused completely on highs and lows, right? But this is something that you need to understand. I hate order blocks. I'm going to put it out there straight. Everyone knows I'm a straight talker. I hate them, right? I don't trade them ever. I'm not saying it's wrong, and I'm not saying, look, order blocks are good for probing order flow, okay? So, like when you're looking at a market maker model and you're going up on the buy side of the curve, okay, you can use the order blocks on the left hand side of the curve, or you can use the order blocks that are occurring below you on the distribution or the redistribution or the accumulation and reaccumulation of stepping stones, okay? You can use the order blocks for confirmation of order flow, okay? That's the only time I ever look at them. What I mean by I don't use them, I don't trade them, I don't use them as targets, right? I don't use them. You see loads of people on YouTube saying what we do is, right, we get an order block, we aim for the order block, and then we'll foresee a rejection from the order block, right? Because there's institutional orders in the order block, right? Absolute load of rubbish, right? Absolute load of rubbish. And I'm going to prove it to you today, okay? What most people don't know, in fact, near enough all people don't know because they've never looked and they're very lazy, is that every single order block, guess what? It has a unicorn model inside on a lower time frame. What happens is, sorry Zeus,
What is a order block on a lower time frame?
it's a unicorn model.
Exactly. And that's what people need to understand. That based off a higher time frame chart, you see where all of the lower time frame opportunities are present.
Yep. Now guys, something that you do need to do is understand your fractality of candles. This is one big mistake that you all do, all of you. You need to understand exactly what that wick is on a lower time frame. You need to know what that body is on a lower time frame. You need to know what this gap is on a lower time frame, so that you can foresee things happening from a higher time frame or a lower time frame, vice versa. Okay. Firstly, I'm going to show you this one, right? What most people do is, right, if for example we're expecting some kind of reaction from this level, me personally, okay, like I said, I'm not going to lie, this is what I want to see. I want to see a reaction, right, from this high. I don't care about the order block initially. I want to see a reaction from there. We don't get that, and then somebody will come to me and say, haha, like, your your high or low didn't work. It was the order block. I told you order blocks are like the thing to trade, right? Now, what that same person does is this, right? That same person will, I don't know, like I only use the bodies. Most people will use the whole wick, right? I haven't got the fib set up, but you get the point. They will split this up into quarters, right? And then when it bounces off the 75%, they'll say, ha, there you go, wow, wicked, I'm amazing, it bounced off the 75%. Well, what if it bounced off the 50%? Oh, yeah, because it bounced off the 50%. Okay. Well, what if it bounced off the 25%? Yeah, it bounced off the 25%. That was the other level. Well, hang on a minute. How would you know that before this happened? They don't know that. And if you do this yourself, you'll admit that you don't know neither. You're just waiting for a reaction off one of those quarters, right? But these same people, all they've got to do is look, right? If I mark off this order block, I'll take this line, get rid, right? And we'll investigate. We'll go down to the 1 minute. Just bear with me, right? We come down to the 1 minute. We have this very obvious order block down here. Now this isn't hindsight, guys, just so you know. I actually did this live, right? We can call this an order block. Most people will say, okay, there's a high, there's a low, but this high is not higher than this high, right? Okay, fair point. But on a lower time frame, this is still a breaker. It starts getting very confusing, right? I don't want to get too technical and overwhelming. The same here, right? For me, this is a breaker, right? And some of you sitting there, and some of you did it on me the other day in the chat, and he went, no, Rich, it's not a breaker. It's not a breaker at all. It's a mitigation block. Didn't take the high. Okay. My argument would be it's still a breaker. People are going to say, what? What's this guy on about? Like, all the guys on Twitter were right. He doesn't know what he's on about. Well, so I'm going to show you, I think it was this one. I'm going to show you NAS, right? Guys, once you understand this, like, this is ES, this is NAS, right? ES at the top, NAS at the bottom. If all three assets make a fail swing, or they make a lower low in simple terms, yes, this is a mitigation block. If NAS makes a higher high and ES makes a fail swing, guess what? This is still a breaker. Go and investigate. Okay? Trust me. If Dow, right? I'm not going to show you Dow, can't be bothered, but if Dow did not make a higher high, and ES did not make a higher high, this would then be a mitigation block. Guys, SMT, right, changes everything. And for those of you that think I'm talking rubbish, I'm going to prove 2 points in one. I'm going to get the same order block, the same breaker, right? I'm going to use this. I have a very different process on breakers. For me, this would be the breaker, but I'm going to use this black candle, like everybody knows, right? What did I tell you about there being an algorithmic price level here, where price will react in the future? Okay, I pull it out, and you're going to say, yeah, but Rich, look, it didn't react cleanly here. Okay, now that's because, as you know, you can use all three candles as the breaker, right? I like to only use one. There's a reason, but we won't go too deep right now. There was a retracement, the retracement that I showed you on the hourly, right? Watch this. And everybody's trying to guess where it's going to react from. Wow. Which quarter was it reacting from? It wasn't. It was reacting from that exact level. Look. It doesn't get any cleaner than that. Right? And then what happens? It just repeats itself. Repeats itself again, right? We would almost definitely have SMT. We would also have another breaker, and we could enter again. Right? It just repeats. Unicorns are everywhere. If you were unsure, you could have used this breaker here, this big breaker. That's fine. Yes, it's not clean. It hasn't got the fair value gap, but you don't have to stress. We'll get into that. Now go back
I
to...
wonder, Rich,
Yeah,
how many times a day do you believe unicorns form?
every hour.
Yeah, exactly.
Every hour, but those ones won't be clean. Like they'll be really messy. But
That's the thing, right? It's about selecting the ones that are not messy.
yeah, and they won't move as far. So
Exactly.
the distribution from those every single hour unicorns won't particularly move that far. Like, that's on the 1 minute though. But if you wanted to try and be smart and talk smart, you could say, okay, you could use 15-minute candles and go to, say, the 10-second chart, and then you get them every 15 minutes. But we don't want to be that stupid. We're going to keep it sensible. And basically, the way I would look at this is, although they happen every hour, what you want to do is only use them when they hit a key level, like this. This is very messy because it's like 5 in the morning. Okay, let's go to the 1 hour and just investigate, and then we'll speed up because, as per usual, I'm talking too much.
I think the people appreciate it, bro. No worries.
Yeah. So if we look now, no doubt we're going to get some smart arse in the background saying, yeah, bro, it was a rejection block. It wasn't a rejection block. It wasn't the order block. It was the unicorn. It was the algorithmic price level right here, right? What's funny is we don't really have enough price action here to really showcase this, but if I was to pull this exact level out in time, right? Obviously we're all-time highs as well, so that's not going to help. You will see how this level here actually reacts all through time. Okay?
Yep.
Now, I'm going to show you one more example, which is here. It's a messy one. Right? Exactly the same principle. This isn't hindsight, by the way, guys, but I traded these, so it's not like I'm just coming to any... And I'm not showing you the cleanest examples neither. But look, we have this order block. I'm going to mark the whole thing. Right? We have this order block. And again, people don't know exactly where they are going to react from. Me personally, I'm already marking the high because I'm not looking for this move particularly. I'm looking for highs and lows to be taken. That is it. That's all I look for. But what I will do is while price is playing out, I will see how it reacts at this specific level, and that will tell me whether or not it's going to take the high. This is where you have to use your brain, okay? I'm already anticipating there'll be a unicorn inside the wick of the hourly. Look for the most obvious one. This is very clean. This is a real unicorn, by the way, guys. Look, and this would have been a high probability trade as well. So we'll just investigate this right now. SMT, right? We have two back to back. I'm going to go off the most obvious one for some of you guys, right? Some of you might say, okay, but we get a little bit of drawdown here, which is fine because the exact price level does occur around the breaker itself. Okay, so even though the BPR was a little bit lower down, it's still important. It's still giving you the heads up of exactly what's going to happen. Okay, perfect move. Look at that. You're only after 5 to 10 handles. That's your day done. That's your week done. If you're smart enough, you only need 5 to 10 handles once a week. You don't need them every 3 times a day, right? Watch this now. This is the unicorn model. All I do, I stretch it out in time. It's that simple. This proves how high probable these are. Look at the reaction. When you see me catching these tight reversals, this is why. I'm just looking back in time. I'm looking first, look, you need to understand this. First, I'm aiming for the high. I want the high to be swept. That's my model. That's my model for life, if you want to say. I want the highs and lows to be taken. Okay? When it doesn't happen, I'm already anticipating this could be a possibility that we don't take, because going back to Turtle Soup framework, this is standard Turtle Soup framework. Some of you are like, what? What do you mean Turtle Soup framework? I'll just touch on it slightly, right? Relative equal highs taken. So now we have a liquidity purge and a turtle soup, right? Most of you think that this move's already finished by the time it gets to here. No, it's not. Right? Standard procedure is to come right back up to 80%, 75 to 80% of the first move before going to the drawn liquidity, which is here. This is standard turtle soup framework. Now, when you see me talking about turtle soup, it's because the turtle soup framework is everything. But what you've got to understand is you don't use the turtle soup itself. You use the market maker framework inside the turtle soup. Okay? You need to understand that. Now, we look at this entry. And I'm sure you can admit, Zeus, it doesn't get much more accurate than this, does it? You know, like, you get these people saying, oh, pull a standard deviation, pull a fib on the order block and split it into quarters, but I'm not being funny. You've got to admit, yeah, it doesn't get much cleaner than that. Now,
I wonder, mate.
Yeah.
Do you mind explaining a bit about how you utilize this knowledge to anticipate an expansion to then take place? into your anticipated direction.
Yeah, of course, mate. There's multiple ways of doing that. The most simplest is using the higher time frame. Like straight away, if I go back to the hourly, let's clean this up a little bit. Mate, it all goes back to like people are just really lazy. Like, and I don't want to speak bad of people, and like, come on, I know some of you guys do work really hard, but what you've got to understand is you need to understand how turtle soups and market maker models are utilized, right? But from this position right here, right, some of you guys are looking at this and you're probably still a bit bewildered, right? But when you've done thousands of hours of back testing, like me and Zeus and some other people in the group, what do I notice here? Very plainly, it's a consolidation. This is a consolidation. All you have to do to find a consolidation is find where all the bodies are in line. So if I wanted to like be really specific, Luke, watch how I do this. Watch. I'm going to zoom in. Do you see how there's more bodies in the shaded rectangle than anywhere else in this area? Right? That's because this is an original consolidation. I already know that by looking at it, right? We can stretch it out like this if we want to. But basically, it's the bodies that give us the most volume of price in one area, right? We don't need volume indicators. We don't need all this kind of caper. If you look here, you see how there's two bodies next to each other. Look, this is also an original consolidation right here. It's that simple. I'll prove it to you. We'll go back down to, say, I don't know, a 5 minute, for example. Look, there's the original consolidation for this market maker model. Right? All I'm doing, I'm using turtle soup framework, right? Because I know that we've souped. I know that the draw on liquidity is lower, right? Which we'll come into in a minute. And I'm anticipating when this leg comes up. When this leg comes up, we're either A, going to sweep the high again, or we're going to react off the previous algorithmic price level, which is the unicorn model. The signature's right there. When this leg goes up, I'm anticipating either a reversal here, which I was, or a reversal here, which is what happened. As soon as I start seeing this reaction here for the reversal, right, then I'm anticipating the distribution and the sell side of the curve, right? And
Do you mind explaining that through the terms of accumulation, manipulation, distribution?
yeah, of course, mate. Let's make this a bit neater for some of you guys. I
I think it's very important for
Yeah.
people to understand the importance of AMD and power of 3 in general.
Yeah. So if we look, we have the accumulation. Okay. We have the manipulation. And then we have this very lovely, nice, strong distribution.
And that's basically your market maker sell model.
Yep. And that's exactly it. It's that simple, right? Yes, price went all the way down here, but we don't care, right? We're looking for the terminus of the market maker model. I wouldn't go to the wick, I'd go to the bodies just to give you a little bit more security, and I would say this was the terminus, right? and literally you could enter here or here. We get SMT here, right? So you enter here or on the pullback. I'm very aggressive. I never wait for the pullbacks into fair value gaps, as Zeus will tell you. I always just enter, or as you can see from my videos. This for me would be the terminus, and I would hold this for at least 10 handles, for example, and it goes 35. But I don't care. I'd be done here. I'd be done when this first low got took. That's just me personally. There's nothing wrong with holding this though, guys. Don't ever think that. Like, it's going to hit the terminus. Whether it hits it today or whether it hits it this session is another argument. But it will definitely hit this level. So that's the...
And I think,
go on.
I think the beauty of what you just showcased here when it comes to AMD is that people need to understand is that with the second line that you just have drawn inside of that blue box, you see that same AMD fractal play out.
Yep.
Do you mind explaining that on a
No.
lower target?
No. So if you look, guys, look, because you need to know how to see this fractally, right? Here, this, okay, so I refer to them as a V shape just for simplicity, right? That...
The drawing skills coming back out.
Sorry?
The drawing skills coming back out.
I know, it's nice, isn't it? This, listen, shit with computers, good trader, that's what I always say. This this guy is a fractal market maker model, market maker sell model, right? This was a market maker buy model. I mean, we can even showcase the two Zeus, there's two there, but if we want to get really technical, we can see that this is the original consolidation of the sell of the buy model. Look, here's the original consolidation. Here's the reversal. Okay, then the one that Zeus was pointing out is this one here, right? So what I'm going to do, I'm going to put myself to the test. Let's see what happens, right? Here we have the original consolidation, right? Look, bodies and the wick. It won't let me cover them, right? So here should be the original consolidation on a lower time frame. Okay, now we'll go and investigate. So if we go down to the 1 minute. Wow, that's shocking, isn't it? Rich the Bull wasn't talking rubbish. So now we have a smaller fractal market maker model. We can even go down onto the, say, let's go look at the 15 second. Let's go crazy. Oh, we can't. 30 second. Can we go to it yet? Now, what do we have here? This is what I was trying to showcase. It's cleaner on the 15 second, but I can't go down to the 15 second. And you're probably thinking, well, how would you know? But me and Zeus are very weird. We can tell you exactly what's going on from a higher time frame. It took me a long time. Zeus used to irritate me when he did it, and then I thought, right, I've got to learn it, and I did. So this would be a very clean unicorn model on a 15 second. But as it is right now, right, it shows here on the 30 second. Now what some of you guys are probably thinking is, yeah, but we don't really get a perfect entry, but this retest is the entry. Okay, because if this candle closed lower, this would be a fair value gap. This is just an immediate rebalance. It's no different. The logic is exactly the same, and this is something that you have to understand. So look now, this is exactly the same fractal. Original consolidation, if you want to be specific. Terminus. Entry. Take profit, 12 handles. 12 handles in like 5 minutes.
And
Done.
Rich, shall we also just explain to the audience then that if you look at all of the retracements that took place inside of this leg lower, that on a even lower time frame, you would see again a market maker sell model.
Yep. It's well,
AMD.
yeah. We're on the 30-second now, right? And what you've got to understand is, right, this is a market maker model on a lower time frame. This is a market maker model on a lower time frame. This is a market maker model on a lower time frame. Look how many market maker models there is. And this is on a 30-second chart. So, and like I say, I don't want to sound arrogant. I'm just showcasing what you can learn if you put your mind to it. And, you know, in the day when some of you guys are saying, oh, I couldn't find a trade set up, or, you know, like, I'm not saying to take every trade set up, but what I am saying is they still need to be high quality setups, right? But once you understand the logic, there's just setups everywhere. Like, this could be like a 1 second market maker model here. And you might be saying, don't be stupid. No, I'm not being stupid. There's people that actually trade these. High frequency algorithms trade these market maker models on a fractal. And then if you look, like Zeus says, we have accumulation. We have manipulation. And then we have, well, that wasn't quite right actually. Then we have distribution. All the way to the terminus. And look how it hits the terminus. Like, this isn't just something that I'm making up. Like, you've just watched me do it fractally. You've literally watched me do it.
And I think what's even more fun to realize is that what you just drew, those boxes, the green one, the red one, and the blue one, are all occurring within a larger fractal of this.
Yep.
A green one, a red one, and a blue one.
Yep.
And in each box,
There'll be one of each.
you will see these fractal boxes.
Yep.
AMD consistently, over and over again.
Now,
And Rich, before we continue,
Yeah.
yes, one thing that people will ask, and one thing that people are struggling with, is the you refer to it as the three candle model. Do you mind explaining that?
yeah, that's what I was just going to say, because one thing that irritates me a little bit, mate, on social media and sometimes in the Discord, so guys, don't hate me for what I'm going to say, but there's certain methods that I'm not going to mention that are circulating right now. And what you don't understand is the fact that Zeus has been talking about this for a long time, but you guys are not actually thinking about what's going on. And although Zeus mainly uses 90-minute cycles, right, guys, you need to listen to me, and I don't want to go too off the subject, but look, the 90-minute cycles, right, are no different than a 1 hour candle, a 90-minute candle, a 3 hour candle, a 4 hour candle, a session candle, a daily candle, a weekly candle, right? They are all timed ranges. That's something that you need to understand, right? And unfortunately for some of you, the 90-minute cycles, right, can be difficult only because you can't foresee it as a candle, because the 90-minute cycles don't line up with a specific candle. I hope that makes sense, and I hope I explained that correctly. What I mean by this is, let me go down to the 5-minute. For example, let's say, for example, Your cycles are 1 o'clock, aren't they, Zeus? I haven't
Yes,
got.
4 p.m.
Yeah, I haven't got the.
1 to 2:30.
Yeah, 1 to 2:30. Right.
Yeah, and I think before we touch on this, I think what's very important to understand is that when I began sharing about PXH and PXL, I literally said it, but people like that's the thing, Rich. You know how it goes. People hear something flashy and they immediately only can think about that, and they miss the other 90% that was shared.
Yeah, it's
But you literally said, yeah, the X that stands between previous and low, for example, or previous and high, can be adjusted to whatever time that you choose. It can be an hour, it can be 2 hours, it can be 3 hours, it can be a day, it can be a week, whatever.
yeah, because this is why it might sound mad, but I literally refer to it as PXX. But I know you can't tell people that because they probably wouldn't have a clue why it's just PXX. But I don't even look at it as PX high, PX low. I just look at it as PXX because for me it's just PXX. Now, what you guys need to understand is, right, Zeus's 90-minute cycles. Look, I started off using these and they are very good. And I did spot something, Zeus's signature move. I spotted it relatively quickly. But just for the simplicity of my model, I don't specifically rely on them too much right now. But if things aren't making sense to me, then I will refer back to them because they are very lucrative. Trust me. If you understand the 90-minute cycles, trust me, that's where Zeus makes all his money. That's where Zeus kills it in the afternoon, right? And the 90-minute cycles do work better for the afternoon. I have to reiterate that. That 2 o'clock time frame. Trust me, this particular move here is an absolute killer, right? Now, what you guys are missing is, right, you've got people saying, oh, well, okay, we'll say candles are ranges. People are saying that, right? But what you don't understand is this. Yes, the 90-minute candles, right, because this is what a lot of you question, and this confused me at first, I'm not going to lie, right? The 90-minute candles, they don't line up, right? Look, the candles are 10:30, 12, 1:30, 3, right? So it's half an hour out, right? Or so. But look, guys, look how simple this is, right? I'm going to do it simply first. This wasn't something that I was going to show you, but I feel like I have to because I feel like Zeus is owed this explanation. Because I think a lot of you miss it completely.
I think people miss it because they don't see the candle.
Yeah. Right, so... Oh, it's all the way up there. Right. Look. All Zeus has done, he's made specific candles in a specific range. In a timed range. Right? Now, inside here, there's still other ranges. There's still 5-minute, 15-minute, 30-minute, 1 hour ranges, right? Obviously, there's not a 90-minute candle, as we would call candle range, because they don't line up. Now, they don't line up for a reason, and you'd be thinking, well, why don't they line up? Well, obviously, somebody somewhere is trying to trick us, right? Or the candles would line up with these cycles. It's that simple, right? It's just trickery, right? So if you look now, we have the candles. It's that simple. That's it. Right? So when people talk about candles or ranges, this is a candle. This is a range. This is a candle. This is also a range. This range to this range is high. Right? Here's
And And instead of reversing, it continued.
Yeah,
That's all that can
yeah,
occur. It's either gonna form a high, like you mentioned, or it's going to continue.
yeah. That's it. Now, if you were smart enough, right, and you can visualize stuff and you backtest this, you can make a proper candle, right? In other words, all you do is find the open, you mark out the open, and now you have a wick. You find the close, and you mark out the close, and now you have a wick. So if you wanted to make a candle, this is what the candle would look like. Okay, this would be the body. This would be the top wick, and this would be the bottom wick. That's it. Did this candle close above this candle? Yes or no? Yes, it did. So what's it going to do? It's going to go higher. It's that simple. Some people, guys, listen. If you're not looking at price like this, you're not working hard enough. And I don't wish to sound rude. And Zeus, you tell me if I'm wrong. But guys, this is all very basic. Like, you might think it's technical, and yes, to me it is very basic, but the top and bottom of this is, if you've not looked into this, if you've not had time to investigate this, you can't say it doesn't work. You can't say that it's irrelevant. You can't say that candles or ranges are better than time cycles. Okay?
Bro, it's all the same.
Yeah.
But the thing is, what people do is they rebrand stuff, they rename things, and then they try to sound smart and all of that
Yeah,
stuff, bro.
yeah. Now, I want
And that's the whole issue of social media.
one thing I do want to touch on, Zeus, while I'm here, is because a lot of people have taken what I've said out of way, like, and obviously you've not spoke to me about this because you understand, right? And I don't feel like I have to explain it to you neither. But what I am going to do is explain this to the community, right? A lot of you have seen me say time cycles are useless. I don't need time cycles. Time theory is useless. I don't need time theory. Right. Don't get it twisted, because sometimes when I write stuff in text, it doesn't come across quite perfectly. Some of you may know I'm dyslexic. Some of you may not. I don't care. It's not important. But when I say that, some people take it very specific, right? And what I mean by that is, right, like, no disrespect to Day, quarterly theory does not work, right? Zeus, tell me if I'm wrong, but you use the time cycles, right, more of, how would I say, you're looking at time cycles more of a guide or a roadmap
Exactly. Yeah, that's what it does.
to order flow, rather than looking specifically at the AMD type of theory of time cycles. Does that make sense? Am I correct?
Correct.
So
Correct.
don't get it twisted, guys. When I said time theory, quarterly theory, and time cycles are no good, they are not. The logic behind what Zeus is doing here, although he calls them time cycles, right? The logic's slightly different, and yes, they are time cycles because they are a timed cycle. They are a timed period, or, to put it plain and simple, they are a timed range. And this is what you need to understand. These are all timed ranges, right? So I just wanted to clear that up, Zeus, before we went any further, because
That's good,
I
man.
noticed that you did have a few comments in your last. There was people saying, yeah, but Rich the Bull said, oh, time cycles are useless. And I thought, oh, wow, like, maybe I didn't explain myself properly, or maybe just people took it literal, but that's what I'm trying to explain, right?
That's the thing. The application of any time theory to the chart is a confirmation of your underlying understanding of where price should reverse. Because that's the thing. We of course know how to spot reversals way in advance. We literally know next week already where we're gonna see our trades form, but we do not know at what time the market will reach that specific, yeah, I'd say POI for us.
Yeah.
So therefore, we don't know if it's going to be during the accumulation phase of our 90-minute cycle, or during the manipulation phase or the distribution phase. Preferably, we want to see it occur during the manipulation phase.
Exactly.
However, the time cycles change, and that's why every single day you see these minor adjustments when it comes to AMD.
Yeah.
Because if you think about it logically, if every single day, yes, between let's say 1 to 2:30 p.m., which is the manipulation cycle of the afternoon session, a higher low would form, eventually the masters would realize that.
Exactly.
Then everyone would say, "Oh, it's this time again, time of day again, so it's now going to form a swing point."
Yeah. No, it's true, mate. And this is what I'm going to reiterate on now quickly. So, guys, look, Zeus's 90-minute cycles. Look how you visualize a candle. Zeus is doing this in his head. Every time he's looking at a 90-minute cycle, he knows what the candle looks like. He knows that this candle closed above this candle. He knows that he's anticipating higher prices. Right? He knows he got a rejection wick on this cycle. Right? He's visualizing this. Now, guys, if you can't do this visually, you need to train yourself by back testing and applying this logic that I've just showed you, how to make your own candles. You don't really need to make the candles, but I'm just doing it visually so you understand exactly what's going on, right? Now, the point that I was getting at is this, right? If you have a 90-minute cycle and this one is the actual manipulation phase, right? So I'm not going to mark it up properly. I'm just going to do it rough quick. This is a manipulation cycle of a 90 minutes, right? This is an accumulation cycle, right? This is a distribution cycle. Today, the manipulation... Oh, sorry guys with it. I'm trying to be quick because I've gone well over time. Right, Luke. Are we alright for time, Zeus? There's no rush, is there?
No. All good,
Give
man.
the people some value. Right, Luke. The manipulation cycle, right, is in the manipulation cycle. This is when we love it. This is when it lines up. Okay. Then you might question, well, the accumulation doesn't, but we don't care because we're always happy to see the manipulation cycle line up, and we're waiting for this distribution, right? Which is perfect. The next day, right, you will find this happen. Right? The manipulation will be in the accumulation cycle. Right? The manipulation just didn't happen, right? And this is really the distribution, and then the accumulation falls in the distribution, and this happens every other day or every 2 days. This happens. Then on every third or fourth day, it will line up nicely again, right? This is what I meant by time cycles are useless, right? When you're looking at it from an AMD perspective, because what I mean by useless is not every single day does the manipulation cycle line up with the exact manipulation in price. If it did, every single day we'll come to the charts at 9:15, right? And we would wait for this to happen, and we'd all long or short. It doesn't happen like that. That's the realization of it, and that's all I meant. Right, moving on. How can we use this information moving forward? Wow. The 3 candle model, which you can see quite a few people talking about right now. I'd like to say that most understand it, or it was something that I've been using for a very long time. Zeus has also been using it. It wasn't something that I was planning on releasing so soon. But here we are. Guys, look, basically, I'm not kidding, right? As far as ease of trading, this is all you need, right? It's very simple logic, right? And it's logic, it's not a pattern, it's logic. Here, we're on the weekly, right? Watch what happens here. This you need to understand, right? Firstly, this candle takes liquidity, so we already know that this is some kind of manipulation, right? But what we notice is this candle does not close above this candle. Watch. This candle closes above this candle, so we expect higher prices, right? This candle closes above this candle, so we expect higher prices, right? It's that simple. If we fail to close above, we can anticipate, right? We can anticipate some kind of pullback or reversal. Now, this only works at a key level, right, or in a POI. So we have a clear POI, right? We have this liquidity pool which forms the POI. I'll make that green for buy side, make that thicker, right? So we have the POI, we can remove it. We know it's this liquidity pool. This was the first liquidity to be taken. Now, as I've already mentioned in the previous webinar, this is where everybody goes wrong. We sweep the liquidity and everybody goes short. No, wrong. This is not a valid turtle soup. Why? Because the candle opened low. It's that simple. The candle opens low. It's designed to go higher. Why would you put your stop loss above a candle that's designed to go higher? Okay? You don't do it. Right? Because the argument is this was the range before and we failed to close above that range. Right? So therefore, this could be the start of a 3-candle model. The reason we don't take it is because of this. Look. This is why every time you take an SMR and your stop loss gets taken with what I call the second dip, yeah, or the next dig down or the next dig up, this is why. This is why it happens. That's the only reason it happens. Right? You have to wait for confirmation of lower prices. And it doesn't happen here because this candle is an open low. Open low candles are bullish candles designed to go up. Although this one closed inside, we don't know what the next one's going to do. There's no proof, there's no evidence, there's no high probability, right? So there's the explanation for why this is a key level, right? We all know now this.
2 seconds.
Yeah, go on, mate.
Before you move on, yeah. Could you annotate that high again for a moment?
Yes.
Ctrl Z.
Yes, mate.
Because what literally everyone is now thinking, they say, oh, he just randomly picks that high. He just looks at that high and thinks, oh, we rejected off there and therefore it's an important level. Look, if people would literally just take a moment and instead of just simply looking at the candles, move their eyes down and look at the x-axis at time, they would see that that high, yes, was the high of April. And we're now in the month of May.
Yep.
During the month of May, we refer back to the April high and low. That's why that high is so important. And that's exactly what Rich is doing in his subconscious. Time-based liquidity.
It's very simple, guys. You're gonna see.
But the thing,
You're gonna.
the thing
Yeah,
is,
go on.
it's
Simple to most.
you know, it's yeah, that's the thing. Like, we're at a level of understanding where we can look down to certain things that people do not understand yet and call them simple. But for the people that do not have that knowledge just yet, it's very hard to comprehend that.
Yeah.
And that's the that's just how it goes. But once people just simply go through it with enough time and patience, all those things will clear up, and then eventually you will realize that it's all very simple. But you just need to see
Yeah.
it. And once you see it and it begins to click, man, you can say for yourself as well, like your model now, it's so simple,
Yeah.
but it's so advanced at the same
Yeah.
time. But you made the advanced
Well,
knowledge simple to use.
the exact fractal that you've just explained on the monthly, I'm going to explain the exact fractal inside this weekly candle now. So they'll be able to understand exactly what you meant, for sure.
Let's do it.
So, look, guys, this is literally my whole model. This is it. This is it, right? Look at the bodies, right? Everybody knows ICT says the bodies tell the story, the wicks do the damage, right? These bodies closed below this liquidity pool, right? This old high. This is telling me everything I need to know before this candle even comes, right? So look, week 1, right? Week 2, candle 1, candle 2. Candle 2 is the manipulation. Now, you could have taken candle 2 because candle 2 opens high, and we're already anticipating a reversal. We already know there's going to be some kind of reversal or some kind of reaction here, which you'll understand more so in a minute when I go into this candle. I don't want to get too deep with you guys, right? I've already talked too much, right? So this candle opens high and it goes low. So if we like to, we can enter anywhere in this wick. Oh. We can enter anywhere in this wick, right? That's not what I want you guys to do right now until you become full-time profitable. I want you to wait for candle number 3. This is the distribution candle. When you look at all Zeus's, every single one of Zeus's trades recently and past, and every single one of ICT's trades, what do? Do they take the turtle soup? Never. Because they can't? No. Because they're not stupid. Because it's not high probable. And it's not the fastest moving part of the movement. Right? The distribution of any setup, right, is the quickest moving, right, and the most high probable move you can take. That's why ICT takes either the first or second phase of distribution or accumulation. That's why Zeus takes the accumulation or reaccumulation or distribution or redistribution. Now, secondly, if I just rewind this one candle, this may not seem clear to some of you, right? I'm not going to go way into detail with this, but it's something that you need to go and look at. This one candle here, right, before this wick came, even now the wick's here, it doesn't matter. Guys, what you need to understand is one big candle one big candle is a low liquidity, is a low resistance liquidity run. Or we can look at it as a liquidity void. Now, this may seem very strange compared to what you're normally learning. This may not make total sense at first, but trust me, when you look into this, you're going to be amazed. The bigger the candle, the bigger the movement, the less mess, right? This is not a low liquidity run. Low resistance liquidity run. See how all the candles are overlapping? Right? The sharper the edges, it's not as fast moving, right, as this will be. It's a fact, trust me, right? I already know when this setup's forming because this was a nice big strong stretch candle. I also know that this move down is also going to mirror this exact movement. You'll hear Zeus say all the time, the sell side of the curve mirrors the buy side of the curve. If the buy side moves up fast, the sell side's going to move down just as fast. If it's smaller little slow candles, the sell side's also going to be small, slow, staggered candles. If it's up move fast, it's going to move down fast, right? Now, watch. When we watch this in real time, I call this a double confirmation, by the way. This is super high probability, guys. You need to follow what I'm saying, right? We have a bigger range, right? Here is the bigger range. This is a 3-week range right here. This is the high, this is the low. This is external. If you want to look at it this way, I don't like doing this anymore, but I'm going to explain it because a lot of you look at it that way. This is external. This is the next external. It's not internal, it's external. Right? Turtle soups go from external to external. This is going to get confusing. I'm not going to go into that right now. I'll do another video.
Another webinar.
Zeus is already rubbing his hands. Right, Luke. So, because we've rejected the larger range, now we've rejected the smaller range inside that range. This makes this pullback super high probability. I'm talking AA plus, right? AA plus, this move. Trust me. Right? I back tested this, I forward tested. I know exactly what I'm talking about, right? Some of you might say, why this range? Right? It's very simple, right? This is the swing high. This is the swing low. For any of you that struggle with ranges, this is going to kill me for saying this, but all you've got to do, literally, right, is until you learn. I'm not saying keep this on or do it. This is going to go mad. You can use a fractal indicator, right? Fractal indicators will teach you the exact swing points, right? But I have to reiterate, you only use it for learning purposes. You turn it off and you throw it away and you delete it once you understand. Okay? It will show you the low to the left, the low to the right, the high to the left, the high to the right. The fractal will show up above and below the swing points. Then it will teach you how to read ranges. That's the easiest way that I can teach you ranges, is by using fractals. Okay? Only for learning purposes. Now, going back to the point, this is high probable. Why? Because this first candle closed inside the larger range. The second candle, candle number 2, closed inside the larger range, inside the smaller range. Okay? Now, what are we anticipating? We're anticipating a pullback, right, into 50% of the range. This is the whole range, right? But it doesn't mean it's going to pull back to 50% of the whole range, right? We have inner ranges. Don't worry about that for now, right? Super high probability setup. This is all you got to worry about. Now, candle number 3, we're going to anticipate candle number 3 to be the distribution candle. Candle number 3 is always the distribution candle. Always. If the 3 candle model forms. Why get involved here? No point. Get involved in the distribution candle. What will this tell me at this point? This will tell me for the next 5 days, guess what? What's the bias? The bias is bearish for the next 5 days. Wow. No more having to worry about bias, right? We're already anticipating this range low to get taken. Why? Because it's the fractal range of the bigger move, the bigger range, and we already know that we need to come to 50% of the range, thereabouts. If it doesn't, it's because there's another fractal range inside. We'll get to that shortly. I'm going to play the next candle, right, just for... Oh yeah, that's it. I forgot it plays 4 quarters. Right, there's the next candle. We can see it play out clearly. This candle, let's neaten things up a little bit. This candle clearly opened high, which is exactly what we were anticipating. Notice how I used the word anticipating, because this is what you need to do. You need to be anticipating moves, right? You don't wait, it's too late, you anticipate. I'm already anticipating this move. Now, funny thing is, what Zeus was just explaining, I'm going to show you a fractal of that. Watch this. Mark out the weekly open. Go to the daily. Right? I'm going to move this over because this was a bank holiday week, so it won't look right, but just hear me out. This says Friday, but it was actually Monday, Tuesday, Wednesday, Thursday, Friday, right? What do we say? We say Monday, Tuesday, Wednesday, high or low of the week, Thursday, Friday, reversal. Okay, write that down. Monday, Tuesday, Wednesday, high or low of the week, Thursday, Friday, reversal. It's that simple. And it applies to everything fractally. You'll see the point shortly. Right? So, I already know my next move is, when this week's playing out, is which days have news, right? Tuesday had news. Where was... I've actually got rid of it. Right, Tuesday was news anyway, 8:30. So, straight away, what's the information I need so far? And it's this. Monday was a bank holiday. Tuesday, we've got red folder news, right? And the news is at 8:30. Right? Guys, listen. I get so frustrated, right, when I hear people in the chats and people asking me and Zeus, when do I know what time to trade? How do I know that it's going to happen then? Guys, this is honestly, this is that simple, right? Look, if we look at the price action, we already know we're anticipating lower prices, right? Now, when I say I'm anticipating lower prices, I'm not doing this. This isn't what I'm doing. The exact thing I'm looking for is this. That's what I'm looking for. I'm not concentrating on the fact that I know I'm bearish. I know I'm bearish, but I need the highest probability entry. And where am I going to find that? I'm going to find that in the opposite direction. This boils down to even your entries, like on the unicorn model. You wait for a pullback into a fair value gap and then you take it long. It's no different. I want to go short. I already know, right? I already know that this is the target right here. I don't want to get in going short. I want to get in going against the trend. I want to go in when price is going long. What day is it going to go long? The day it manipulates. What day is it going to manipulate? It's going to manipulate on Tuesday at 8:30 or just after. It's that simple. Am I sat at my charts at 6 o'clock? No. Am I sat at my charts at 7 o'clock? No. Am I sat at my charts at 7:30? No. I'm sat at my charts at 8 o'clock doing some quick analysis, making sure that I'm correct in my thoughts. Right? What am I looking at on a bigger scale? Right? I'm looking at an open high of the weekly candle. You can see that the weekly open here. I'm looking at this. This is what I'm looking for. Weekly open. I'm waiting for the open, retest. That's the weekly candle. Right? Yes, the weekly candle closed high. That's the weekly candle. That's exactly what I'm looking for. This is what I'm anticipating. Tuesday, look what happens. We get the free candle model again. Shock horror. Exactly what Zeus was saying on the monthly. We're anticipating Q2, right? Or the manipulation phase of whichever cycle you're looking at. Weekly, monthly, yearly, daily, right? Three candle model. Strange, no? Where's it going to take? It's going to take the range low. Because we're bearish. 100%. Not 50%. Not 90%. 100%. If we are truly bearish, 100% it's going to take the range low. 100%. Right? This is how it works. Dead simple. So what's happened? I've literally come from a 3 candle pattern or model on a weekly. I've got a week's worth of bias to help me. My highest probability is on the daily when I get another 3 candle model inside that model. Now I'm waiting for the distribution candle. I could have taken the soup, by the way, but that's not what this model's about right now. Not on this candle neither, because it's an open low. Now we're waiting for the open high of this candle, and it's very small. So what I'm going to do, I'm going to mark this candle. I'm going to go down to the 4 hour first. It's not the cleanest, by the way, but I'm not picking these in hindsight. I'm just going from what happened last. That's the start of Tuesday's candle. Okay, we'll go down to the 1 hour. We'll just skip it all and go down to the 1 hour. Now if you look at the reaction from this drawn liquidity. Tuesday was rather nasty, right? I'm not gonna lie. You could have found options to get in. They're not very clean, right? This is just me being straight with you, so you know. But what I did want to show you was here at 3 o'clock in the morning, for any of you that trade London, we have what's called, it's another 3 candle model, but this is a continuation 3 candle model on the hourly. So we have reversal 3 candle models here, and we have continuations. That's the only 2 that there is, and they're the only ones that you should be interested in, right? The next opportunity came at 12.
Before you continue, Rich, do you mind explaining why those are the only 2 people should be interested in?
Yeah, sure, mate. Because what happens is, again, if we end up pattern trading the 3 candle model, you can find a 3 candle model anywhere. They're everywhere. And the average person will just come to us and say, well, I've seen it all over Twitter, right? All over Twitter, people were just coming up with 3 candle models all through price and saying, what are you on about? They don't work. Nothing works without context. We have to have a reason, right? Trust me, the 3 candle model works. I've been back testing this for months now. I've been trading it live for weeks and weeks and weeks and weeks and months, right? We need context. The context for this is, right, if we don't have price reversing from a key level, it's a continuation, and it's just a distribution phase. Basically, the 3 candle model continuation is literally, right, it's literally the silver bullet of a continuation. It's literally the distribution or second phase distribution phase, or accumulation or second stage accumulation phase, which we'll go into shortly. The next available model is right here, right? Now, if you wanted to counter trend, liquidity gets taken here, and we can go long back into the range 50%. We're not talking about that today. We're talking about only the high probability moves, which is with higher time frame order flow. At 12 o'clock, this was very messy price action, but I'm going to keep it real. This in fact gives us a very difficult price action, right? Very difficult. And as a beginner, it's nothing that I would take I was going to mark something up, but I'm going to refrain because I don't want to confuse you. I wouldn't take it. So, candle number 3 on this day is a washout, right? Very difficult price action for the average person. I traded it. I'm not going to go into it. I'm trying to keep it simple for you guys, right? The next day, we still bearish. This is where things get really interesting, right? I'm going to rewind this. In fact, no, I'm not. I'll lose the place, right? If there's no news, we know that 9:30 is going to create the SMR. On this day, there was news, right? But 9:30 created the SMR here before getting taken out later on. Now, Luke, we don't care that this happened. It's irrelevant. The 3 candle model forms again here at a key time, at a key level, right? Luke, we get this double confirmation again. Liquidity gets taken, right? We fail to close above the range candle, candle number 1, and we fail to close above the liquidity level and the range candle, or if you want to look at it as the bigger range and then the smaller range inside. Double confirmation. This is a high probability A class setup. Some of you are going to say, yeah, but Rich, look, the high got taken. Guys, watch what happens, right? We're looking for the 3rd candle, candle number 3. Let me bring this over. Just want to check. Yeah, we'll go down to the 1 minute. Now, if any of you aren't happy with this move, I'm afraid you need your heads looking at. Because although this wasn't the biggest move of the day, this was the most high probability move of the day. You need to understand that. This move here, although it wasn't the biggest move of the day, this was the biggest move. This was the most high probability. Now, you may be thinking, whatever, Rich, but guys, the evidence is right in front of you. It's right there. And if you can't see, you need to learn how to read price more. In what part of all this price action did price move the fastest, the furthest? Was it up here? Or was it exactly where I preempted the distribution phase to be? And I hope your eyes were drawn to this move right here. Strangely, or not, my high probability A plus setup that I pointed out, strangely, created the biggest move, the fastest move of the whole day. Yes, this is the biggest move overall. In time, this is the biggest move, fastest move there was. This was the most lucrative move.
Quickest.
Sorry, bro.
The quickest.
And strangely, I chose to enter here. And guess what? There's always a unicorn model. Now,
Bringing it back to the beginning of the webinar.
Because it's important, mate. Everybody's trying to catch the turtle soup here, right? It's low probability. Look at all the messy. Yes, it moves down quick. You wouldn't have got out. You'd have been greedy. Would have come back up. Would have messed around. Time distortion while we wait for Dixie to hit the target, or we wait for Nasdaq to hit the target, or we wait for YM to hit the target. Then all of a sudden, bam. Why do you want to sit in all this mess? Why do you want to get all excited? Then you want to get all depressed. Then you want to get all excited. and then your head's going, and you know you want to kick the dog or something because you sat through all this mess here, right? The idea is to get in right here, combined with SMT and the open high of this candle. Look what happens now. The point that everybody's missing on everything that ICT's been saying, and all this hype of the 3 candle models and candles of ranges and all this stuff, right? The difference is, guys, the educators can't tell you what me and Zeus can tell you. Trust me, I don't care what anyone says. We're above and beyond the average, well, more than the average people. And that's not me being arrogant. I truly think that. Me and Zeus have conversations that are just on another level, and I struggle now to even find people to have conversations with.
But that's the thing, bro. Like, you get to a level that the circle just gets smaller and
Yeah.
smaller.
Guys, Luke, what time's this candle? Candle number 1. 8 o'clock. What time's the manipulation candle? What time do we expect the manipulation? Other than the next news time. 9:30. This is the 9 o'clock candle. What's the distribution candle? 10 o'clock. Think. 8, 9, 10. 8 o'clock, 9 o'clock manipulation, 10 o'clock distribution. What has ICT been banging on about the whole of 2023?
Begins with silver.
What is ICT's actual model? What did ICT say out of all the models? If he had to choose one model for life, what would that model be? It would be the silver bullet. Right? Some of you at the moment are having a light bulb moment, and some of you are still bewildered. Right? And I'm going to show you. Look, I'm going to zoom right in. Accumulation, manipulation, distribution, high probability reversal, at least back into the range, if not taking out the last low. Right? What everybody, and I mean everybody, I don't care, listen, if you've heard this out there, this has come from me. I don't care who said it. Right? This come from me and Zeus. Me and Zeus knew about this ages ago. Right? We've had conversations about this months and months ago. This wick right here is the silver bullet. This is the distribution. This is why ICT, if you notice when ICT does a silver bullet trade, right, he doesn't just turn up on any old day. He'll turn up an hour before and he'll say, right, I'm going to trade a silver bullet. Somehow he knows the ultimate times and days to trade a silver bullet. When he knows the high probability, this is how. This is exactly how. If you use a little bit of logic, 8 o'clock creeps up, doesn't quite take the liquidity. Right? I already know, guys, listen, this is how you have to think. I already know 9:30 is going to purge the high, and then I need to come back and check that the 9 o'clock candle closed back inside the range of the range candle. If it did, I know I'm trading at 10 o'clock, and I already knew at 8 o'clock. 7 o'clock, I could come and check the chart, nothing happening. Go away. Come back at 8 o'clock, what happened? 8 o'clock still didn't reach. Okay, sweet. So now I know 10 o'clock, I already know at 8 o'clock that 10 o'clock I'm going to be trading. What do you mean? Well, it's obvious. 8 o'clock did not take the liquidity, so that means 9 o'clock has to take the liquidity. Or 10 o'clock or 11 o'clock, depending on which way it's going to go. But I'm already anticipating this exact thing to happen. I'm anticipating 9:30 to take the liquidity, and I don't care, I'm going to leave it alone, and I'm going to come back at 10 to 10, and I'm going to wait. What does ICT say? ICT says, watch, and this isn't cherry picked, I'll go to another example in a minute. ICT says go to the 5 minute and take the first 5 minute 5 minute fair value gap. Let's test that theory. What do you know? Do you want me to draw it out for you? First,
That's a rhetorical question.
5 minute fair value gap. Lo and behold, bang on time, 10:20. Write that down. 10:20 to 10:40. That doesn't mean it can't happen earlier, and it doesn't mean it can't happen later, but the majority of silver bullets happen in between 10:20 and 10:40. Backtest it. Don't listen to me. What happens? We get a very nice move down. Even if we entered the bottom of the fair value gap, we still get a 10 handle move. What does ICT say? Aim for a minimum of 10 handles, 5 to 10 handles. Job done. High probability, not just high probability, AA plus high probability setup. Now watch. Now look for something obvious. It's 9 o'clock. $12 o'clock. 10 o'clock. Right, look. Here we go again. And you must understand that these times are more high probability. 8, 9 and 10 is more probable than 10, 11, 12, right? This is why ICT says the silver bullet happens every hour. It doesn't mean it happens every hour. It does on a lower time frame, but on the 1 hour time frames, right? So when people say there's a silver bullet at 10 or 11 or 12, this is how you know exactly which time it's going to form, right? I'm going to rewind this for simplicity. Right, this one is 10 o'clock. I'm gonna highlight the model. Look. Liquidity was taken. Right. We highlight the 10 o'clock candle. What does ICT say? Go down to the 5 minute. Look for the first 5 minute fair value gap. I'm gonna highlight it for you. Wow. Very simple. Me personally, I choose the unicorn setup, but the silver bullet's right there, high probability. What did I say before? The silver bullet occurs most of the time in between 10:20 and 10:40. Look, 10:45, bang on the money. You need to backtest this hundreds of times. You'll see it recurring. You'll see it happening over and over and over and over again. Now, what happens when it doesn't happen at 10? That's what you're all thinking. Do I have to wait for a 3 candle pattern or 3 candle model to happen 8, 9, 10? Guess what? No. That's why the silver bullet in the distribution phase, because if you haven't already worked out the power and what I'm trying to explain to you here, hopefully you're going to get it after this explanation. So yes, I am going to cherry pick a slightly cleaner model for the explanation. I want a really clear one. And don't think because I'm not showing you one right now, right here, they don't happen. They do happen. They happen every single day. I've been taking these every single session, right? Now look here. Okay, perfect. Liquidity gets taken, right? It gets taken at 9 o'clock. As soon as this happens, everybody's long. What happens? The second dig that always takes everybody out, the one that always used to take me out, and I used to get frustrated thinking, why is it that the second dig always takes me out? Look at what I'm showing you. This is very high probability. Guys, you know I don't rave on about fair value gaps, but something that I have noticed is it's another algorithmic signature that when these three candle models form inside a fair value gap, they are super high probability, right? We've taken liquidity. We've shown signs of rejection because candle number 2 closed inside the range of candle number 1, right? Look at the time. It shows you the time. This is what I mean by time. This is all the time you need to know. Was the news on this day, right? Yes. What time was the news? 10 o'clock. Right? What time do we expect the manipulation? 10 o'clock. What time's the silver bullet going to be? Not 10 o'clock. 10 o'clock's the manipulation phase. So that means 11 o'clock is going to be the silver bullet on this particular day. Now when your manipulation and distribution phases don't line up, this is why. Because all you have to do is let price show you exactly when it's going to happen. 9 o'clock comes, we're just sweeping liquidity. I already know that the silver bullet's not going to be 10 o'clock today. It's going to be 11. I already know that the distribution phase is not going to be 10 o'clock. It's going to be 11. How do I know? Watch. In real time, look. I've come to the charts, right? I've noticed at 9 o'clock we sweep liquidity into a fair value gap. I'm already anticipating a 3 candle model. And for that to happen, I know that we've got to have another 2 candles. It's 9 o'clock now. 10 o'clock's going to be the next candle. So now I need to see the manipulation. I need to see the liquidity purge of the previous candle with a closure inside the range. Then I already know that 11 o'clock is going to be the silver bullet or the distribution and the redistribution. Guess what? Go and have a coffee. Go and have some toast. Go to the gym. Go and relax with your family.
Time with the missus.
Yeah, relax with your family. You know,
Exactly.
you already know. Everyone else is sat at their screens waiting, or they're already in because this is a turtle soup. Turtle soup, guys, turtle soup. Let's go long. Yeah? No. Walk away. Go and enjoy life. Go on, Zeus.
And every single 15-second up-close candle will be, oh, buy it.
Yeah.
I'm missing out.
Yeah.
But that's the main thing that I hope people are realizing when listening to this webinar. First of all, I truly hope that people are still listening because it's already a long one. But that's the thing. If you're still listening to this, you're going to make it as simple as that. But how many times has Rich mentioned I'm anticipating? The word anticipating. That's it. He's not reacting to price. He's not, oh, I see an upclose candle now, I'm anticipating higher prices for the day, so I'm gonna buy it. No, he's anticipating at what time his entry will form. During what time window. There's a major difference there between the pattern trader who just reacts to the pattern forming and someone who is anticipating when and where the pattern will form.
Yeah, exactly, mate. And I feel like you're correct there, mate. Anticipating is one of the most underused words in trading, and I feel like that is something that everybody should be focusing on.
Yeah, but the thing is, bro, the majority of people don't have the knowledge to even be able to anticipate when and where their things form their patterns because they don't know what makes their pattern work
Yeah,
or not and when it
yeah.
should work. But that's the thing. That's you only realize that once you've spent the countless hours of investigating, just spending chart time. Like Rich, how many hours a day were you studying when you
This
were
is
coming
no
up?
lie now, and I can even swear on my mother's life, right? I was doing in between 12 and 16 hours a day for around 9 to 10 months.
Just stuck to the charts every single day.
But that's how I know what I know now. And that's how my brain is programmed to see these things so naturally. And that's how I can be sat on the 1 hour or the 4 hour and I know exactly what the 1 minute's doing. And when I go to the 1 minute, I can look at the 1 minute and I know exactly, I know there's a unicorn forming on a 15 second without even looking at it.
Exactly. Because you've programmed your mind
Yeah.
to see these things.
So we'll get on with it. We'll get on with this now because obviously time's going on. I don't want you guys getting bored. But Luke, for me, you've heard me say, let the lazy be losers. If you're still not watching this now, you won't even know I've said it, and you'll be a loser, and you'll be losing trades. The ones that are still here listening, you're going to go far, right? So Luke, I'm anticipating the reversal. It's this simple. I'm going to say it one more time, right? I'm anticipating a purge of the low, right? And a close back inside the range. The reason I need a close back inside the range is because it's showing me that price does not want to go lower. This candle closed below this candle's low. That means it wants to go lower. This candle closed below this candle's low. So this means it wants to go lower. I'm waiting for a rejection of this exact price level, which is what we get. Right? And I knew this at 8. I knew this at 9 o'clock. I knew that I would not be getting involved till 11 o'clock. Okay? 11, 10, 10:50, I come back to get involved. And I already know exactly my entry model. I already know I'm looking for a breaker and a fair value gap or a breaker and a BPR inside this wick or formed previous, and this candle will dig down into that fair value gap or that BPR, and then it will rush away. Look at the candle. How can anybody argue with me to say that, Rich, you're wrong? It's not possible. Every single third candle that I've showed you is always a big thick candle. Yes or no? I hope you're answering yes. So to keep this it's very simple, right? And it is simple. I'm coming to the charts. If I can, I'm looking at the higher time frames, right? I'm looking for a 3 candle model. Okay. What do we see? The following week. Wow. 3 candle model. I don't want to mention names. They know who they are. There was a hell of a lot of people saying lower prices in the chat. I already knew, but I don't like to argue. I don't like to tell people they're wrong, because if I was actually wrong and they were right, I wouldn't want to change their mind. But I was very confident. Why? Because it was a 3 candle model inside a fair value gap that had bounced off another fair value gap that had bounced off support turn resistance. Guess what? Bullish week. Waited for the candle to open low. What day are we expecting a low to form? It was on a Monday. Monday, Tuesday, low of the week. Thursday, Friday, reversal. Am I wrong? What did I say in the very beginning? Monday, Tuesday, Wednesday, high or low of the week. Thursday, Friday, reversal. Drum that into your head. There's an 81% chance that the high or low of the week is going to form in between 6 p.m. 6 p.m. on Sunday until Tuesday. 4 p.m. on Tuesday. That's the highest probability. Monday, low of the week. My bias for the whole week until all-time highs were taken were very simply bearish. Every single day on these days.
Bullish.
Yeah, bullish. It's been a long day, guys. Zeus is behind the scenes messaging me saying more, tell him more, tell him more. I'm getting DMs. Now, all I'm doing is every single day I'm looking for key times, right? So let's just keep this dead simple. I've showed you the examples on the weekly, right? I'm doing the exact same thing. I'm coming down to the daily. You might only get one 3-candle model or two. You'll get one on the Monday, Tuesday low, and then you get another one on the Thursday, Friday reversal, right? Normally. But you're saying, like, some of you might not be thinking clear, and you might be thinking, yeah, but that's only 1 or 2 setups a week. No. It's fractal. Every single day, you've got the opportunity to get in. And it's like this, right? All I'm doing is I'm literally, that's the higher time frame order flow. If we go down to the 1 hour, on each and every individual day, what time's the news? That's it. That's my whole model. I don't even understand like how I'm supposed to make it any simpler. That's my whole model. What time is the news? Right, it's 10 o'clock. Right. I'm going to wait for a 3-candle model to form with the manipulation candle being 10 or 11 o'clock, for example. That's it. That's the whole model. Look. What happens here? This is afternoon, by the way. Afternoons are different, right? Afternoons, 1:30 is 9:30. It repeats. Listen to what I'm saying. 9:30, 10, 10:30, 11, 12. In the afternoon, 1 o'clock, 1:30, 2 o'clock, 2:30, 3:15, 3:45. 1:30 is 9:30. The day is split into 2 deliveries. You split the day into 2 from 12 noon. Okay? Exactly the same thing happens here. 3-candle model. What time does ICT say the silver bullet is in the afternoon? It wouldn't be 2 o'clock by any chance. 2 o'clock silver bullet. Right? The morning session. What time is news? There was no news. 3-candle model. 10 o'clock. 10 o'clock silver bullet. I can't remember what happened on this day. Let's investigate, see whether I'm talking rubbish. Or to see how clear it is. Surprise, surprise. There's 2 options. We either take the fair value gap before, we can actually wait until the very next candle for the second stage distribution. That's the 11 o'clock candle, by the way. If you went down onto the 1 minute, you would catch this in the proper time. But either way, it doesn't matter. Silver bullet. Don't forget, nothing is perfect, but that is clearly the silver bullet. Even though it wasn't the first 5 minute fair value gap in the 10 minute candle, on the 1 minute the entry would be here. Okay, it's that simple. I'm not going to give you step-by-step instructions for this model, and I do think that the simple logic is very clear already. Use the 3 candle model to find your bias on the weekly and the daily. The only question you've got to ask yourself is, guys, I'm going to keep saying it, what time's the news? There is no news. Okay, 9:30 should be the SMR. Guys, is there any news? The news is at 8:30. Okay, 8:30 should be the SMR. 8:30 should be the manipulation. If it's not, follow the candles. What I mean by follow the candles is this, right? This was a beautiful trade. I took this trade as well. This was a high probability trade. 10 o'clock news, right? 3 a.m. right? Key time of day. We expect 3 a.m. to be the low of the day. 3 candle model worked perfectly. Now we have a 3 candle model at 7. Okay, another high probability setup. There was news at 10. What did news at 10 give us? News at 10 give us a 3 candle model. A continuation 3 candle model, not a reversal. Well, you can class it as a reversal on the lower time frame, but you see the point. This is a clear reversal. What I mean is, this is a reversal. I class this as a reversal. I class this as a continuation because it's just a continuation of this same leg. Okay, so today, because news was at 10, what time was the silver bullet? The silver bullet was at 11. The distribution candle was at 11. The manipulation was at 10, not 9, or 9:30 if you want to be precise. Right? The candles, the algorithm tells you the time. Guess what? There's SMT there. Guess what? There's SMT there. Guess what? SMT is time. SMT shows you the exact time. Now, if I can find one last thing before we leave it there, because like I say, Zeus, does the model come across clearly without actually giving like step-by-step instructions?
Yeah, for sure. I think that if people would investigate everything that you've shared thus far,
yeah,
bro, and combine that with everything that has been taught within TOTK, when it comes to just our whole basically core content, man, that right there gives them all the understanding that they need.
Because they don't like. Because I talked too much in the beginning, I didn't get a chance to showcase. Like, I was going to go a bit more depth, like with step-by-step instructions, but I don't think I need to.
The thing is, bro, this is, I think this is perfect because look, I do this as well. Is that whenever I share something, I always keep the gems until like the middle or the final part, because you don't want to spoon feed people. You don't want to go out and say within, let's say, 10 minutes this and this and this and this and this, because that's not how one develops patience. By listening to this whole masterclass, this whole webinar, people are listening, developing the patience that they need live. And they don't realize it. Because nowadays everyone wants everything within just a tap. Look, let me watch this and then get it.
No, but sometimes I struggle to know how it's coming across from the other end. That's why I'm asking. So, Guys,
I
one more
get that.
thing. Just
But
yeah,
you're
one more
right, bro.
thing. This is very important, right? And you see this occurring twice here. Look. So the bottom chart is Nasdaq, right? What I do want to press on is SMT between Nasdaq and ES is high probability, right? I do use YM as a last resort, okay? Just so you know. Now look what happens here. ES, we get a failed 3 candle model. Why is it failed? Because this candle closed above, right? But look what happens on Nasdaq. This is the highest form of SMT. Trust me. Listen, I've got more data on this than you can ever imagine. Nasdaq forms a perfect 3 candle model with the rejection inside the range. ES does not, right? Here, Nasdaq does not respect the range and it closes outside the range, yet ES makes a 3 candle model perfectly and closes inside. What happens here, guys? Look what happens here. We get a perfect market maker sell model. We get a perfect market maker sell model. This is gold. This is gold. This is gold information. Look at the SMTs between the lack of respect for the range and the close in and outside of the range. And it happens twice in a row next to each other. You can take both trades. You already know exactly which candles to enter on. Both candles break both the ranges and then some. This is just so powerful, guys. Look. This is going to make you laugh, right? What did I say? Just. And this is just so you know I'm not talking rubbish. Zeus, what time did I say the manipulation was if there's no news?
9:30.
And what, because there's no news in the afternoons other than FOMC, what does 1:30 do?
Manipulate.
Yeah, so it repeats exactly what 9 o'clock did. 9:30. 1:30 repeats what 9:30 did. Guess what? What time's that? So there's 9:30. There's 1:30. Look, 10 o'clock. What does ICT say? 10 o'clock. Silver bullet.
Silver
What does
bullet.
he say about 2 o'clock p.m.? Silver
Silver
bullet.
bullet.
So if you thought I was full of rubbish, go and investigate that. I'll highlight the times and dates for you. That was Thursday, the 30th of May at 9 and 1. Hopefully you can see that on the recording. I'll leave that there for a second while we close off.
I wonder, Rich,
Yep.
one more thing before we close shop for the day. Would you mind explaining to the people how you view the door? I know it was not on the scheduled topics, but I feel like it's very important for people to know that even if they're looking at the index futures, that looking at the door is crucial.
Yeah, like this has been a bit controversial in the chat. And guys, listen, like this can be difficult for beginners, right? But I feel like as beginners, you should already be concentrating on this, right? I'm going to show you something, right? So on the higher time frames, let's look at ES for a minute. I'm hoping, yeah, that was it there. Right, look, guys, look. This is all twinned in, so just bear with me. What I want to show you is this, right? What were we saying about the unicorn model? Did I not say me and Zeus have said it's the highest probability algorithmic signature there is, and it hands down. There's no one can argue. I don't care what anyone says. I'll argue to the death that I'm correct, right? And I am correct. I know I'm correct. It's been proven. Me and Zeus, we know where price is reacting, and it all fits in perfectly.
Every week.
Or
every
what
day.
do we see here, guys? What do we see? Think bias. Okay, I don't like the word bias, but think bias or think higher time frame order flow from this low. Strange. Perfect unicorn model with the BPR. Okay, there is one on a lower time frame, right? It's here. That's why price reacted here, because fractally, right? Fractally, this is the breaker, and that's why we had this reaction off this wick. Now, the reason I'm explaining this to you is because the unicorn model is fractal, works on the yearly, the monthly, the weekly, the daily. When you see a unicorn model forming on the 4 hour, we can anticipate bullish prices, right? Knowing, right, that first we're going to take this high and then possibly going back to all-time highs, which is what I was anticipating. It's as simple as that. The entry model, right? When you've got a 3 candle model on a higher or lower, listen to what I'm saying. When you've got a 3 candle model on a higher or lower time frame, that's everything you need. When you've got a unicorn model on a higher time frame or a lower time frame, that is all you need. Right? Now, how does that work with dollar? Exactly the same. What's going to happen is ES, I'm going to show you the exact same price action. ES did this. Right? On the higher time frame. We want to see, bear with me, a little bit of retardedness coming in. We want to see Dixie do this at around the same time, right? But what will happen is Dixie will skip slightly in front of ES, not by hours but by minutes. The reason I'm telling you this is because on a higher time frame, once ES does this, right? Let's put this here just in case anybody screenshots or anything. Once ES does this and Dixie does this, it's a done deal, guys. It's a done deal. Once we know the drawn liquidity is down here, and once we know the drawn liquidity is up here, look how much time we have to get involved. We have weeks, we have days, we have hours, we have minutes, right? Depending on the fractal that you're using, right? Now, on the higher time frames, this is why we get time distortion. This is why ES will come this close to its target, come back on itself, then come down, then violently go through, or vice versa, because we're waiting for Dixie. When Dixie's here and it's messing around on a higher time frame, on ES we've got time distortion waiting. Time distortion is just waiting for Dixie or ES or NQ or YM to hit the targets. That's all it is. Now, when you get confused and when you're looking for why price is doing what it's doing, all you've got to do is flip through the other assets to see who's not hit the target, who's waiting to hit the target, who's already hit the target, and why we're waiting, and you'll see it now. This is higher time frame. This is 4 hour. This is daily, right? When price has hit my POI, right? So now we're looking at the 1 minute. Listen carefully. This is the 1 minute, right? At the same time, right? I'm watching ES, right? I'm not looking at Dixie, right? At the moment, I probably will have two screens on, but this is the point. I'm on the 1 minute. It's the exact unicorns that I've just been showing you, right? I've hit the POI at a key time. So I've hit a key level at a key time, right? Liquidity's here, say for example, and it's also inside a fair value gap, right? For example, this is, say, 10 o'clock. Right, it's 10 o'clock at night, but 10 o'clock in the day, right? This is 10 o'clock. This is the silver bullet, for example. ES is messing round, right? A little bit of up and down, up and down, up and down. You've seen it before. We get like a bit of a consolidation before it dibs into the fair value gap. The reason for that is we're waiting for Dixie to hit. But before all this happens, we get this. Dixie will have already made a unicorn model. Trust me, Dixie moves in front, right? Some of you guys may have seen me sat round hovering, like I'll hover like a stalker, like a weirdo, or waiting to get involved. I'm waiting for this to happen. I'm waiting for the real change in delivery here. I'm waiting for the real CSD. I'm waiting for the algorithm on Dixie to go from a buy program to a sell program. Once Dixie hits here, Dixie will start stretching straight away. I'm talking in between 5 to 9 candles, maybe 9 minutes in front of ES. When I see this happen, I know it's a done deal. All I do, I sit back and I wait. Everyone else is itching to get in. Everyone else is thinking, is it going to happen? I already know it's going to happen. I've just watched Dixie 9-10 minutes in front already retest the breaker and start moving away viciously. And all I'm waiting for is one close above the breaker. One close above the breaker. And I'm in. I'm long. Already anticipating a possible pullback and drawdown. Why did I not get in here? Because sometimes it moves off without you. Okay? Is there a right or wrong way? No. Is there a more sensible way? No. The only thing you have to worry about is your mental capacity. I enter this trade on a close above the breaker, again anticipating that there could be a pullback to the fair value gap or to 50% of the breaker. And I'm anticipating this to happen. Right? And I don't care about this drawdown. I'm anticipating it. I'm mentally aware that this is going to happen. Right? So the point I'm getting at is Zeus. Dixie makes a unicorn model, retests the breaker, flips into a sell program and aggressively moves down 9 to 10 minutes in front of ES. I've already anticipated that I'm waiting for one candle to close viciously or aggressively above that breaker. As soon as it does, I'm long. I'm not scared, and it's not wrong to enter there knowing and anticipating drawdown. I'm not retarded. I'm not stupid. This is all thought about down here. I've already drawn the breaker out before I've even made the SMR. The breaker's already highlighted. I've anticipated this high, this intermediate term high, to be a breaker because I'm in line with time. I already know that news was at half 8. I already know that we have not hit the drawn liquidity by half 8. I already know that we have not hit the drawn liquidity by half 9. Now I know that 10 o'clock I'm anticipating the draw on liquidity to be hit. Key times, did we hit the drawn liquidity, yes or no? No. Continuation. Next key time, have we hit the drawn liquidity, yes or no? No. Continuation. Next key time, have we hit the drawn liquidity, yes? Possible reversal. Dixie stretches off short, well ahead of time. Close above the breaker, enter long. And that's how I do it, mate. I use them together.
I think that right there is the explanation that everyone has been desiring for such a long time.
Well,
Dixie is crucial.
100%. I'm not disputing sometimes Dixie can be frustrating. Some people would say that the correlation is not that important. I would beg to differ.
We're nearly 3 hours in, Rich.
It's a nice number.
And, it's a very nice number. It's multiple hours of complete value.
It's
probably one of the best masterclasses inside of TOTK.
It's 3 fractals of 1 hour.
And I want. Yeah, exactly. AMD. First part was the accumulation with regards to the knowledge. Second part, the manipulation, a bit more saucy, and then the third part, distribution. Everything came out.
That's how it is, mate. That's how it's planned.
But we of course spoke about hosting this masterclass. Spoke about why you want to do it, and it's because you want to take a break off the social.
Yeah,
right?
it's only a short break, mate. Maybe 4 to 5 weeks, maybe.
Yeah, just go a bit dark and just focus on
I'll
yourself,
still be
right?
in TOTK, no doubt, dropping some bits and bombs, bobs every now and again. I can't help but drop the bombs, guys. But so I may not be around for a little while. I will be bobbing in backwards and forwards. I just thought I'd give you guys a little bit of something to work on, and then when I come back, I hope some of you guys are absolutely smashing it. Now, guys, listen, just before we do end, I want to say this. If you combine this information with Zeus's mentorship, like, I'm not even joking, you don't need anything else. Literally. You don't need anything. That is it. You don't need to go on YouTube. You don't need to read books, right? You don't need to listen to some idiot on social media, right? You don't need to spend any more money learning anything. You only need this information, right? And if you haven't already done Zeus's mentorship, and that's all you need, nothing else. Would you agree? Don't blow your own trumpet,
sure.
but would you agree?
Because no, but that's the thing. Like, I feel like so many people are constantly they're switching. Meaning they spend some time here, then they go to that one, then that one, and that one, whatever. And it doesn't work that way. You literally need to focus on one simple framework, one simple model. Because everything you literally explained during this masterclass is all part of one larger framework. That's it. That's literally it. And if you understand that framework, every single market move can be explained and anticipated.
See, guy,
At the right time,
I just want, yeah,
key
I just want to say
explanations.
one thing though, guys. Right, listen. I know there's guys in the chat, and I used to do this a lot myself, right? And just used to say to me, "Bro, you're crazy. Calm down, right?" I used to take every single move in the day. I used to take every single reversal in the day, right? As you know, my bias is long and short, right? Am I capable of that? Yes, I am, right? But the stress that that takes on you is a lot. You can win 7 trades in the day and lose 2 and actually be unhappy with yourself, even though you've probably made 12% in one day and the average person doesn't even make that a week, right? You can still be disappointed with yourself. Guys, listen. Trade this model at the key times, right? And that's it. That is it. Don't trade 5 times a day. Don't even trade twice a day. If you find the 3 candle model that highlights the distribution candle and you already know what time it's going to occur, wait for it, take it, smash it, and walk away. If this only happens 3 times a week, right? Even if it only happens twice a week, trust me, it happens every session. I find it every session, whether it's on the 1 hour or the 15 minute. I must highlight the fact that the 1 hour is the highest probability. 15 minutes okay, but 1 hour sweep of liquidity inside a fair value gap with the 3 candle model is very high probability. Okay? Taking 6, 7, 5, 4 trades a day, guys, don't do it. This is why you're not profitable. You only need 2 trades a week. If you get 2 trades a week, right, and you make a 2R on each of those trades, which is very, very, very easy. 5 handle stop loss, 10 handle take profit, right? You're making 4% a week. Zeus, put into perspective 4% a week.
In terms of what
Yeah,
it
in
could do
terms
for
of
one.
what other people do, what hedge funds do, what uh,
Oh, that's when you think about what is a or considered as an industry standard to be considered good, bro. You can go way beyond that, honestly, because that's the thing. You need to realize that the reason why there are these industry standards, it's because that's what has been accepted as, oh, this is normal, this is good, because they don't know the things that we're showing you right here. They are simply just doing very simple things, simple ideas, and that's what they're executing based upon. And they have many different strategies that they're using, and that's how year to year they're making average returns of, let's say, what's considered good. What would you say is a good performance for a hedge fund? 12%, 15%,
no, mate,
something
like
along those lines.
normally 10%.
Yeah,
They,
even less.
yeah,
That's the
they
thing.
normally aim for, and this is the truth, right? Because I did look into this a while back. They look for around 10%. If they hit 6%, they're happy, but they're looking for around 10%.
Exactly. Now think about what's possible with this knowledge. Literally, one trade, yes, can put you, or let's say 1 to 2 trades, can put you above what they consider as very good.
Yeah, easily,
1% risk, there you go.
easily. And for those of you that either new or may not see the bigger picture, if, for example, you had a 200,000 account with FTMO and you made 4% of a 200,000 account once a week, 1% is 2,000, 4% is 8,000. So if you can't survive on 8,000 a week, I think you need to get rid of your missus or husband if they're high maintenance.
Exactly. What a
Yeah,
stream it
mate.
was, Rich.
Wow, you did it again, mate. You milked the bull. Oh dear.
Oh, yeah. Please let us know in the comments what you thought of this stream, guys. Just tag Rich and I, or the other admins and moderators inside of TOTK. We are very happy to hear your
Guys,
feedback.
listen. One little favour before you do go. Anyone that does watch this, will you please smash Twitter? Because look, we don't ask for much. Like, it's not like we're asking for money for the information. We're not asking you to pay for a mentorship. This is basically a mentorship. These videos like this, these are like a little mini mentorship. We're not asking for anything. But what we would appreciate was if you go on Twitter, right, and just say, listen, Rich and Zeus did an amazing stream. Like that's all I'm asking for anyway, personally. Just hit Twitter, hit social media, let these people know that we don't mess around. We're not charging money for extra information every 2 minutes, and with a real deal. That's all I ask for. Thank you.
Yeah. And it's also, we don't engage in drama or anything like that. All we're here for is just providing the value. That's all we care about. Rich, of course, you had an habit of trying to show off to the world, but luckily you're also getting a bit more professional about things. But I feel like that's just the way that one should behave. It's a responsibility when you get an audience.
No, it's 100%, mate. Yeah, I was a bit hot-headed at first when I was getting negative comments and people saying stupid stuff, but you'll notice I've got rid of a lot of my information. Any information that's got anything to do with anyone else, I've completely got rid of it. I'm having a restyle of my Twitter very soon. I'm just getting some stuff made up now professionally, and I'm just not going to be engaging with anyone. Basically, I'm just going to be posting my information. People can take that information how they like, and I'm just going to carry on regardless. I'm not even going to get wound up with idiots or pay attention to them. I haven't got time for that, mate.
Yeah, exactly. This life is too short to focus on
Too
negative
too
energy,
busy
bro.
making money, brother.
Exactly.
Yeah.
Focus on what matters. And that's the thing. You will never hear a successful person speak badly about someone else because they're too busy focusing on their craft. And you know yourself how hard is it to balance trading with a personal life and to also spend time with your loved ones. Because it's very easy to get, like you were initially, chopped up. You were so focused on trading that you lost track of what's really
Yeah, it's very
important in
true,
life.
mate. It's a fine line, mate, in between obsession and professionalism.
Exactly.
Yeah.
Thank you again, guys, for
Yeah, thanks
watching
for your
this
time,
webinar,
guys.
and have a very nice day.
Yep. Good afternoon, guys. See you later. Bye.